Hello and welcome. You're watching Business Today TV. I'm Sakshi, Batra, and this is Market Today, a show where we'll help you understand all the closing action of the day street, the way the day really panned out in terms of trade for the benchmarks, for the broader indices, and also in terms of the sectoral moves and the buzzing action that we've been spotting through the day as far as some specific stock moves are also concerned. We'll also get you the expert views on overall markets, the strategies that investors must follow, and the pockets that can actually be looked at from now on for a considerable amount of profits, even in this kind of a market as well. Let's first up look at how the markets are trading, especially the Sensex and the Nifty. Good day so far, and the markets towards the closing of the session are looking to end the day at the day's high point. Over a percent jump for the Sensex, 61,077 as the current level, 645 points of an upside is what you can see. 170 points of a jump on the Nifty as well. It's trading 17,941 as the current level, very close to that 18,000 mark as well, and about 0.9% of an uptick can be seen here. Let's see if the mood in the broader markets also improved a tad bit from the opening levels and the mid-trade as well. In the mid-cap and the small-cap 100 indices, if you spot, that were lackluster and were still sulking through the trading session. Right now, if we speak, you're able to see the Nifty mid-cap 100 index and the small-cap 100 index still lower in trade today. About 0.1 and 0.2% of a decline can actually be spotted for that one too. In terms of the market breadth of the Nifty 50 stocks, it's clearly favoring the advances, 33 advances to 17 declines right now as we speak. Which are the stocks that are gaining the momentum? It's the IT pack that has been shining bright right from the word go today, and therefore you can see HCL Technologies, Infosys as one of the top gainers on the Nifty index. When you talk about the other heavyweights, Reliance Industries has been showing a good show today, 2.3% uptick for that one. FMCG players like ITC are also a part of the top 5 gainers on the Nifty pack. UPL also gaining strength as well. Down in the red, you're actually seeing some of the stocks from the power basket still down in trade, perhaps about NTPC, power grid kind of stocks. Eicher Motors is down by 2.5%. Apollo Hospitals, Grasim, Sun Pharma, the other stocks that are actually, seeing some kind of a cuts today. In terms of the sectoral moves that we've been talking about, like I said, that it's the IT stocks that have been gaining momentum right from the word go today. So leading the pack. Apart from that, it's FMCG majors. They are also supporting. Metals have seen a sharp recovery today, 1.3% uptick for that one. PSU banks have also come in a sharp way, rebounded in the second half of trading session, 1.2% uptick. But still, it's the realty pack that is looking, lower, looking dull at this point in time, 1.7% of a downtick for that one. And the auto stocks and the pharma stocks are also in the red. But time now to welcome our guest for the day. Ambareesh Baliga joins in. He's the independent market expert. Welcome, sir, and thank you so much for taking the time out. Always a pleasure having you with us on Business Today TV. First off, your take on the markets in the last 2.5 months or so. The markets have been pretty sideways, very range bound, despite all these big triggers coming along. The biggest economic event, the budget happened, the RBI moves, US Fed. Despite all of these, moves and the triggers that we saw, and most of which were actually, in line with the market expectations. Despite that, we've not seen any enthusiasm in the markets really. And of course, on top of that, there has been this Adani Group developments that has weighed up. How are you looking at the market setup right now? Today's move, does it indicate that we will finally be able to move on from the Adani Group of stocks development and the chart our own territory as far as the upside is concerned on markets?
Markets were overvalued. I mean, if you're talking of 2-3 months back at about 18,500, 18,800, they were overvalued. So we had that correction. I think the biggest event in the recent past has been the Adani issue, because of which we saw most of their stocks, nearly all their stocks, falling decently well, and because of which the rest of the market also got affected. Budget normally has been a non-event. If you see the last couple of years, it's a non-event. I mean, we talk about it for 2-3 days, and after that we forget. So the way I see markets right now is it is still a bit overvalued. We could see a further correction. But at the same time, I mean, if we are between this range of 17,800 to 18,200, then it's no man's land. We don't know which way it will be going. Only if it crosses 18,200 or 18,400 decisively, then we can talk of a new high. But I believe that we could still see a further correction from here, because whatever said and done, I think even the Q3 earnings which we have seen till date is not enough to take the markets to the new highs. So, and at the same time, I mean, you just look at the inflation figures which have come, which means we'll still have further hikes. So, I mean, my belief is that before we see a new high, we could actually see levels of closer to about 16,800, 17,000. That could be a level to actually get into the market and possibly get fully invested. But
Okay.
till then, I think it's better to stay on the sidelines. This is a trader's market. Possibly
Okay.
investors should stay on the sideline.
Okay, stay on the sidelines and wait for that 16,800 kind of levels to really get into the market and be fully invested in the markets. We've also seen large part of the earnings also play out. Your thoughts on the way earnings came about, anything that stood out in terms of the sectoral performance or specific stocks perhaps. How would you really sum up the entire December quarter earnings so far?
See, I think, like I said, it's mostly mixed. I mean, the auto pack was decent. FMCG, I mean, earnings were slightly better than what I had expected. IT was more or less in line. Pharma, we had a couple of disappointments because of which we have seen cuts. But at the same time, there are a couple of pharma companies which did well, and we've seen those stocks really shoot up.
Hmm.
So, pharma also has been a mixed bag that way. Uh,
Okay.
Cement, I would say, a bit disappointing. So
Hmm.
overall, it's a mixed bag.
Okay, okay, understood that. Since you said that 16,800, that would be more attractive levels for the investors to really look at to get into the markets. Which pockets or which sectors would you really advise them to keep their focus on? We've seen the sectoral rotation really play out in 2021 and
Right.
2022 as well. Even now, we are seeing time and again, some of these new age stocks have started to spring up. So that's becoming a theme that we are talking about right now. Overall speaking, any particular sectors that are attracting your attention?
Sectors which I'm looking at are automobiles, where we still see a decent amount of waiting period for passenger cars. LCV, HCV sales have picked up decently well. Again, looking at the sort of spend which is happening on infra.
Mm-hmm.
So, I mean, that pocket should do well. Because of the spend on infra, I think cement over the next at least foreseeable 2 years to 3 years should do extremely well. Specialty chemicals is the other space which I've been quite confident about. 2022 was not for specialty chemicals. 21, we had an extremely good move. And post that, we have seen that correction. I think at these levels, the specialty chemicals are decently valued. And possibly this year, we could see a good move in terms of China plus one, Europe plus one playing out.
Hmm.
FMCG and fast-moving white goods, I think that's one pocket which should do decently well. Looking at the expansion of income as far as the rural
Yeah.
is concerned, and at the same time, the sort of SOPs which have got in IT for the middle class, I
Hmm.
think that is what will push both these FMCG as well as fast-moving white goods.
Okay, okay, understood that. What is your take on the infrastructure as a sector, specifically with that 10 lakh crore rupees expansion plan announced in the budget? Which are the
Absolutely.
pockets that are likely going to be, the biggest beneficiaries of this?
No, biggest beneficiaries would be clearly the EPC players because this 10 lakh crores was much more than what people had expected, much higher than what we have seen in the past, at least the last 2, 3 years. The sort of increase was huge. And this should clearly, I mean, benefit the EPC players and all the ancillaries, including
Hmm.
cement, steel. I think this is the space which should extremely well, especially cement, because
Sure.
that's something that is not so much imported, whereas steel can get imported. So it will not really have that major trickle down effect on steel, but cement and the EPC players.
Okay, but let me just talk to you about some of these pockets, especially starting off with the Adani group of stocks. Now, after this entire 10, 15 days of play out that we've seen, about 16 sessions of the news development that started off from January 24th and the
Right,
carnage that has followed thereafter. Today, let's start off with, Adani Enterprises, because just, an hour back or so, we have got the results of Adani Enterprises,
right.
where total income has gone up 42% as well. EBITDA is shot up 100% odd as well. The net profit coming at 820 crores versus a loss of 12 crore rupees. Overall, how do you analyze these results? The stock has given a thumbs up. It's rebounded from the losses in the initial half of the trading session. Should one really look at the fundamentals and really approach the stock looking at these now?
I wouldn't give too much of weightage to Q3 earnings of Adani Group because this is the past. This is before that event. And the biggest issue which the group would be facing now and going forward would be fundraise. I
Yeah.
think the future growth was clearly dependent on fundraise, and that I think will get postponed at least by 18 months or 24 months. And because of which the growth people are talking about, as far as the group is concerned, I think that will taper off to a certain extent. Uh, Having said that, I mean, there is no doubt that all the businesses are in extremely sweet spot. Most of the sectors should do extremely well. So I see there's a question mark on the performance of the companies in the longer term.
Correct.
Cash flows are there. So, I don't think anyone is really questioning the business of the Adani Group. The issue was somewhere else. So I think once that gets sorted out, they could come back on track. But I think it will take a while because the biggest issue, like I said, is fundraise, which clearly kind of cannot happen because of which the growth will be much lower than what was earlier envisaged. At the same time, despite the sort of earnings they have shown, most of those stocks are still quite expensive. So
Correct.
we could see a further correction once things normalize. I think we should see further correction. And in fact, a stock like Adani Enterprises can come down to the levels that I mean the lows which we saw recently of something below 1,000.
Okay, okay, below 1,000. And then one could perhaps look at it then as a fresh buy?
No, I mean among
No.
this group, I think two stocks which I would prefer would be Adani Ports, where the business is solid, and Adani Wilmar. I think these are the two
Okay.
stocks I would look at. Adani Enterprises, although I've said that it could come down to 1,000 levels, but I still feel at 1,000 it could be expensive.
Okay, understood that. What about the other stocks? What would you really suggest investors do? Because most of these stocks have actually been stuck in lower circuit forever. I mean,
Right.
like if we talk about Adani Total Gas, it's for the 16th straight session it has declined. We've seen Adani Power in lower circuit for the fourth straight session. Adani Enterprises for the fourth straight session on a lower circuit. Then we talk about Adani Green Energy. It has declined for the 10th straight session. Only once in the last 16 sessions it was up. You know, all those investors who've enjoyed the best part of the rally in the last year, now they are feeling stuck as to what should they be doing. What would your advice be?
No, since it's in lower circuit, quite a few of these stocks are in lower circuit, and unfortunately, the circuit level is 5%. I mean, if there was no circuit, possibly it would have found its value, just like the way Adani Enterprises found its bottom at 1,000 and then moved back. If there was a 5% circuit for Adani Enterprises, even today you'd have seen a lower circuit. So
Yeah.
since there was no circuit as such, I mean, it saw the right price and then moved up from there. So I think this can continue for a while longer, but then those who are holding to it, I mean, I don't think one should really look at selling off. I mean, unless you're a trader. If you have, I mean, if you have a holding capacity for the next 2 years, 2.5 years, one should possibly look at averaging out at lower levels where, I mean, where we see the bottom. I mean, I
Yeah.
really don't know the bottom for these are. So once they see the bottom, it moves up, say 10, 15% from there. Possibly that could be the time to buy. I mean, for example, I can give you an example of Adani Enterprises. I don't think
Sure.
anyone could have put it at 950 or 1,000 when it saw the bottom. But even if you bought at 1,200, still you're in money.
Okay, okay, understood that. Let's move on from the Adani Group stocks. The one more pocket that I was just briefly mentioning, and that was the new age tech stocks. I wanted to ask you, in your viewpoint, is the worst over for these new age tech stocks? Looking at some of the earnings and perhaps the tonality of the management now, the focus increasingly coming in on improving their own bottom line and really pushing further all the efforts to come into profits earlier than expected. Any of these stocks that may be of interest to you that are looking promising at the current valuations, things looking better for them? Zomato, PB Fintech, Paytm, Nykaa, any of them?
One thing which has changed is their focus on profitability. I mean, there were managements who said that we don't look at profits at all. At least now, the focus is there on profitability. And the way Paytm has shown that positive EBITDA, I think, I mean, that's commendable. But if you ask me, I mean, jump in and buy Paytm now? May not be, because I would just need to, I mean, be doubly sure that they're not playing to the gallery and showing the EBITDA positive.
Yeah.
And unless it's consistent for the next 1 or 2 quarters, possibly I'll not jump in. But at the same time, the negative view which I had about Paytm, I think that is off. I mean, at least for the time being.
Okay.
And in case we see a decent correction, I may in fact look at possibly buying it at lower levels, but not at the current levels.
So
Among the
what would
other
be the
stocks,
comfortable level, sir?
I would possibly look at levels closer to about 425, 450. I
Okay.
think that's the level I would be comfortable with. And the other newest stocks, which I've been positive on, clearly is Policy Bazaar and delivery.
But after the results of delivery, were there any disappointments, or do you believe this is an aberration and the company will be able to pull up?
It was a bit of an aberration, but then clearly the company has said that they will be EBITDA positive by FY25. I think they should be able to achieve that.
Okay. Apart from this, I also wanted to take your view on the small and the mid cap stocks and these sectors. Are they increasingly looking promising for this year? Should one really increase their allocation to these big pockets because they've not performed previously in the last year?
Yeah, in fact, you get your alpha for the portfolio from the mid cap and the small caps, but at the same time, one needs to be extremely be careful on the choice of stocks because a 100 rupee stock can become 50, it can become 200. So
Yeah.
one needs to be extremely careful when you're picking up this. In the sense, what I would suggest is do your research well, understand the company you're buying, and just don't buy tips.
Okay. Just last question to you before we wind down the show, sir, and that is, if a millennial investor is looking at the markets right now, looking to create a portfolio, looking to perhaps invest about 10 lakh rupees in this current market. You said that 16,800. Maybe if they wait for that 16,800 levels and then go all in, how should one be really constructing this portfolio? Where all does the money go?
No, typically, I would say for a decent portfolio, you should be investing. I'm talking only about the equity portfolio. About 60% of your equity funds should go into the blue chips and the large caps. That forms the base for your portfolio. And to get that alpha, I think you should utilize the rest 40% into mid cap and small caps, and which preferably mid cap should be about 25 to 30%, 10 to 15% could be small caps.
All right. Well, on that note, thank you so much, Mr. Baliga, for being with us on this show and discussing with us these various sectors and specific stocks also that we've talked about and helping all our viewers really understand how to maneuver in this current market scenario too. Many thanks. Always a pleasure having you with us. Well, look at the market, 600 points up, 61,039 for the Sensex right now. The Nifty also hovering 156 points up in trade, almost at the day's high, 0.8% up, 17,926 as the current level. Looks like we are headed for a positive close. We just about 12 minutes away from the closing action, and perhaps we'll close at the high point of the day as well. We leave it at that, but do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. Also, don't forget to subscribe to this channel and stick with us via our other social media platforms. That's Facebook, Twitter, LinkedIn and Instagram. Many thanks for tuning in.